There's a moment every newcomer remembers vividly, the first time they stumbled upon the world of crypto. It might begin with a headline about someone turning $1,000 into millions, or a short TikTok video of a stranger sitting beside a Lamborghini claiming he made it all from Bitcoin. Sometimes it's a friend, someone you trust, saying, "Bro, if you don't get into this now, you'll regret it." At first, everything feels electric. Crypto doesn't look like a market, it looks like a revolution. Prices move fast, charts dance like heartbeats, and every green candle feels like a promise. A promise of freedom, of wealth, of breaking out of ordinary life. For many, that's the moment rational thinking quietly steps aside. Instead, the mind floods with possibility. A new world opens, one where money seems to multiply overnight, where the stories of success feel endless. You hear about Bitcoin rising from pennies to thousands, about early holders becoming legends, about altcoins that exploded 100 times in a month. You start imagining what could happen if you just put in a bit of savings. What if that small amount doubled? Tripled? What if you found the next Bitcoin? The thought alone is intoxicating. The crypto market has a unique charm compared to traditional finance. Stocks feel slow, real estate feels complicated, business takes effort. But crypto? It's easy to buy, open 24/7, global, digital, futuristic. The entry barrier feels almost non existent. You download an app, verify your identity, and within minutes, you're holding tokens that fluctuate constantly. There's something thrilling about watching value change every second. It's as if you've been handed the controls to a rocket, told it might take you to the moon, and all you need to do is hold on. And that's where the first trap appears. Excitement, a silent, powerful force. Newcomers don't just enter the market, they dive in with emotion leading the way. They aren't thinking about risk or strategy yet. They're thinking about escape from the ordinary. They're thinking about dreams they've carried for years, paying off debt, buying a house, proving something to themselves or others. Crypto becomes not just an investment, but a ticket, a shortcut, a path to a better life. Everywhere you look, there's noise reinforcing that dream. Social media flooded with green charts, bold predictions, influencers shouting, "You're still early." You see screenshots of profits, but never the losses. You watch memes about going to the moon, about becoming rich from a coin named after a dog, and you laugh. But you also wonder, what if it actually happens? The fear of missing out creeps into your thoughts like a whisper in the dark. If you don't enter now, you might be too late. If you don't buy, the train might leave the station without you. So you deposit money into an exchange. Your heart races. You buy your first coin, and suddenly you're no longer an outsider. You're part of the game. In that first moment, you feel unstoppable. You refresh the app every few minutes, watch the price tick up and down. Even the tiniest increase brings a rush of adrenaline. You imagine the future again. If it goes up another 50%, what then? If it doubles, triples, could this be the break you've been waiting for? That longing fuels millions of newcomers. They step into the market not with caution, but with hope. Hope that this time life will reward them quickly. Crypto has a way of making newcomers feel like geniuses during an uptrend. When the market is green and coins are pumping, it's hard not to believe you're making the right decisions. You buy a coin, it rises. You buy another, it rises too. Doubt fades, confidence blooms. Logic starts to drift away as gains appear effortless. You start to think, maybe it really is this simple. Maybe those who missed out before were just unlucky or too skeptical. You look back at the people who laughed at Bitcoin, and part of you smiles, thinking you might be ahead of the curve now. But beneath all the excitement lies a truth hidden in plain sight. What draws newcomers into crypto is rarely understanding. It's emotion. The desire for wealth blinds them to the risks. They enter the market as dreamers, not investors. They don't see the stories of those who lost everything. They don't see the countless wallets that went to zero after investing in meme tokens, or the projects that disappeared overnight after raising millions. All they see is the upside, the potential gain, the glory of being early. The irony is that the very thing attracting newcomers, the possibility of fast profit, is the same thing that often leads them to lose money. Crypto magnifies human emotion. When prices rise, hope turns into greed. When they fall, excitement turns into panic. And for someone new, unfamiliar with the rhythms and cycles, the experience feels like stepping into a storm without knowing how to navigate. It's thrilling, yes, but also dangerous. Still, in this first stage, nobody is thinking about loss yet. The market shines like a city of gold in the distance, and every newcomer wants to claim a piece of it. They enter with stars in their eyes, believing this time will be different. They don't realize they are walking into a battlefield where knowledge and discipline matter far more than hope. Crypto offers possibility, but possibility is a double-edged sword. It can build fortunes, but it can just as easily destroy them. Newcomers enter expecting reward, unaware that the market doesn't care about dreams. It rewards those who understand it and punishes those who don't. But they will only learn this later. For now, all they feel is excitement, anticipation, and the thrill of joining something massive. They believe they are early, chosen, ready to change their lives. And so, with hope burning bright, they step forward into the market that has made many rich and has taken even more. When the excitement settles, perhaps a few days or weeks after that first purchase, reality begins to reveal itself. Prices no longer move only upward. One morning, you open the app, and the green numbers that once looked like a blessing have turned red. Maybe it's just a dip, you tell yourself. Markets go up and down, but the dip keeps dipping. That confident voice inside starts to tremble. Questions rise. Should you sell? Should you buy more? Should you wait? And that's when a newcomer truly realizes entering the crypto world was easy, but understanding it is a different story. Most newcomers arrive without learning the fundamentals. Blockchain sounds like a buzzword, decentralization like a slogan. They've heard phrases like proof of work or market cap, but only vaguely. They don't know how tokens are created, how supply affects price, how liquidity works, or why some projects survive while others vanish. In many cases, they don't even ask. Why bother with research when people online say, it's going to the moon? Why read white papers when someone on YouTube confidently predicts 100 times return? Crypto doesn't forgive ignorance. Unlike traditional markets, it doesn't require brokers, advisors, or regulated financial structures. You are the decision maker, and that also means you are responsible for your loss. Many newcomers buy coins because someone else recommended them, or because the chart looked exciting. They enter trades without knowing what they're buying. They cannot explain the utility of the token, the team behind it, the roadmap, the technology. In truth, they are not investing, they are guessing. There is a fundamental misunderstanding among beginners. They believe price reflects value. But in crypto, price often reflects sentiment, hype, speculation. A coin can pump not because it has groundbreaking technology, but because thousands of people believe it will. Hope becomes liquidity. Rumors become catalysts. A tweet from an influential figure can move billions. This is not a market powered purely by fundamentals. It's a marketplace of belief. Some coins have real use cases, building infrastructure, enabling smart contracts, powering decentralized finance. Others exist solely to ride the wave of trend and disappear later. Without knowledge, newcomers can't tell the difference. Everything looks like an opportunity. Every chart seems like potential profit. They see a new token launch and think, if I get in early, I'll be rich. But early is not the same as safe. In many cases, early means being the exit liquidity for someone else. Technical analysis is another world of confusion. Charts filled with candles, indicators, patterns, it all seems like an ancient language written by mysterious traders who speak in terms like RSI, support zones, Fibonacci levels. Beginners quickly realize that knowing when to buy and when to sell is not a matter of intuition. It requires understanding trends, momentum, volume, market structure. But instead of studying, many default to emotion. They buy because the chart is green and sell because it is red. They chase pumps and flee crashes. In other words, they trade with feelings, not knowledge. There's also the issue of time. Newcomers expect quick results. They want overnight gains, not months or years of learning. They jump into futures trading with 20x leverage because someone on Twitter did it and bragged about doubling their account. They think more risk equals more reward. They don't realize that leverage doesn't amplify profit alone. It amplifies mistakes. One wrong move and the entire position is liquidated. The market takes their money in seconds and teaches them a brutal lesson. Impatience is expensive. And then comes the realization that crypto is cyclical. It moves in waves. Bull markets bring euphoria, bear markets bring despair. Those who understand cycles accumulate when others are fearful and take profit when others are greedy. But newcomers often do the opposite. They arrive during hype, buy the top, panic, sell near the bottom, and walk away believing crypto is a scam. They don't see that the market wasn't unfair. They simply entered without preparation. This lack of knowledge is not a shameful thing. Everyone starts somewhere. But the problem is that many start trading before they start learning. They treat investing like buying lottery tickets, hoping luck will compensate for what they don't know. But luck is not a strategy, and hope is not risk management. Markets reward discipline, patience, understanding. They don't care about dreams or intentions. Inexperienced investors also underestimate volatility. A 20% drop in crypto is normal. A 50% crash can happen in a week. A coin can go from hype to worthless in hours. This is a battlefield that moves fast. Without knowledge, you can't see where the danger lies. Without strategy, you can't protect your capital. Crypto requires education just as much as capital. But newcomers often learn through pain first, knowledge second. Eventually, they find themselves staring at a portfolio that no longer grows but shrinks. Confusion turns into frustration. They wonder what went wrong. They thought they were investing smartly, but in reality, they were gambling unknowingly. And in that moment, they begin to understand one of the harsh truths of this market. Money doesn't flow to the most excited or hopeful. It flows to the most informed. The market is a teacher, but its lessons are expensive. Some pay with time, some with money, many with both. Knowledge is the shield in this arena. Yet most only start forging it after their first loss. And from this point, the story shifts, not just from ignorance to awareness, but from the individual mind to something far more powerful and dangerous: the crowd. If lack of knowledge opens the door to mistakes, then emotion kicks it wide open. Crypto is not just charts and code, it is psychology in its rawest form. Prices move because people feel. Greed pushes them up, fear drags them down. Every candle you see on a chart isn't just a price. It's belief, doubt, hope, panic, patience, impatience, all colliding in real time. And newcomers, without experience to anchor them, get swept away like leaves in the wind. There is a strange phenomenon in markets. When prices rise, people want to buy more. When prices fall, they want to sell. It's the opposite of logic, yet it happens every day. A newcomer sees a coin soaring and thinks, "I'm missing out." They rush in not because they analyze the project, but because everyone else seems to be making money. They feel late and desperate to catch up. They buy at the top, where euphoria peaks. They screenshot their green profit and dream about how high it could go. But markets don't move like fairy tales. They breathe, expand, and contract. And after euphoria comes correction. Slowly at first, then suddenly. One night, they refresh the app again and again, watching the price slip. Just a dip, they reassure themselves, but deep down anxiety starts whispering. They believed they were early, but now it feels like the train is leaving without them in the opposite direction. Panic doesn't come all at once. It creeps in with doubts. What if it keeps dropping? What if I lose everything? Everyone online said it would go up. Were they wrong? Or worse, was I the fool? This is how the cycle unfolds. Hope turns to greed. Greed turns to fear. Fear turns to loss. Investing is often described as rational, but in crypto, rationality lasts only until money is involved. Humans are emotional creatures. When a portfolio grows, they become bolder. When it shrinks, they become reactive. The market exploits this perfectly. Experienced traders know that emotions are the real opponent, not other investors, not whales, not even volatility. The enemy sits within. Meanwhile, newcomers don't fight emotion, they dance with it, unaware they're being led off a cliff. Crowd psychology is contagious. When thousands start buying a coin because of hype, others join reflexively. Headlines amplify sentiment. Social media becomes an echo chamber where everyone agrees that the price will only go higher. But crowds are dangerous because they don't think, they react. And as fast as the crowd buys, the crowd can sell even faster. The same voices that once chanted to the moon will later scream, "Get out now." Fear of missing out, FOMO, is one half of the emotional trap. The other half is fear, pure and raw. When prices fall sharply, newcomers panic. They watch their balance shrink and the dream crumble. They sell at a loss just to end the discomfort, telling themselves, at least I saved something. But the market, cruelly indifferent, often rebounds after they exit. They watch it go up again, without them this time. The pain of missing the recovery burns deeper than the initial loss. Many jump back in, chasing their money, and thus the cycle repeats like a psychological roller coaster that never ends. The irony is painful. Newcomers buy high because everyone is bullish, and they sell low because everyone is afraid. They are not trading assets, they are trading emotions. They are not following strategy, they are following the herd. But the herd rarely profits. It feeds the market, providing liquidity for those who understand the cycle. Money moves from the impatient to the patient. The crypto market is essentially a battlefield of opinions. Behind every trade, there is someone on the opposite side. For someone to win, someone else must lose. When a newcomer buys a coin at peak hype, someone else is selling to them with a profit. When they sell during panic, someone else is buying cheaply with patience. Understanding this dynamic is crucial. Profits don't appear from nowhere. They transfer from one wallet to another. And most often, they transfer from emotional hands to disciplined ones. There's also a deeper truth rarely spoken aloud. Some players want you to feel emotional. Whales manipulate price to shake out weak hands. Influencers hype coins they already hold. Projects create buzz to pump valuation. In such an environment, emotion isn't just a weakness. It is a vulnerability exploited by those who understand the game better. Newcomers don't see this at first. They believe markets move organically, fairly, predictably. They think if everyone is buying, it's safe. If everyone is scared, something must be wrong. But markets are not built on truth. They are built on perception. And perception shifts quickly like tides under the moon. In this stage of a trader's journey, losses often hit harder, not because of money alone, but because it feels like betrayal. The market that once looked like a golden opportunity now feels like a beast with sharp teeth. Hope becomes frustration. Confidence dissolves into self-doubt. And yet, despite the pain, most don't leave immediately. Something in them whispers that maybe, just maybe, they can win next time if they try again. They start searching for signals, gurus, quick strategies. They blame the market rather than the mirror. They haven't realized the real challenge is not predicting price, it's mastering emotion. Crypto is a psychological war disguised as financial opportunity. Those who survive learn to think independently, to resist the herd, to act logically, even when fear or greed screams otherwise. But newcomers learn this lesson only through experience. Sometimes that experience costs a little. Sometimes it costs everything. And that leads to another invisible force shaping losses: misinformation, hype, and the seductive voices of the internet. If emotion creates vulnerability, then misinformation sharpens the blade. The crypto space is loud, deafeningly loud. Every day brings a flood of tweets, videos, Discord alerts, Telegram messages, and flashy thumbnails promising the next 100x gem. Influencers post predictions with confidence that borders on certainty. Thumbnails filled with rocket emojis, bold red arrows pointing up or down, urgent titles like "Buy now before it explodes" or "This coin will make you rich." It feels impossible to ignore. Newcomers enter seeking guidance, but instead they walk into a storm of opinions, each louder than the last, each claiming to know the future. But here's the first bitter truth. Most people giving advice don't know any better. Some are guessing, some are gambling, some are paid, some profit when others lose, and very few admit it. In the traditional financial world, analysts hide behind disclaimers. In crypto, a teenager with no experience can move markets if he's loud enough. Hype doesn't require facts, it only requires attention. Newcomers mistake confidence for competence. When someone speaks assertively, it feels like they must be right. "Trust me, this coin will moon" sounds convincing when the speaker shows screenshots of profits. But those screenshots don't show the losses. They don't show the failed investments, the liquidations, the empty portfolios. Social media is a highlight reel. It shows winning moments, not the learning curve behind them. Then there are pump and dump groups. Thousands join hoping to be early. The leader announces a coin, everyone buys at once, price shoots up, excitement fills the air. But before newcomers can even process what's happening, the insiders sell. The chart collapses like a broken bridge. Those at the top exit with profits. Those at the bottom hold bags of losses. And the newcomers wonder, why didn't it go as planned? The answer is simple. The plan wasn't meant for them. But manipulation isn't always obvious. Sometimes it comes dressed as opportunity. A new project launches with promises of revolutionizing finance, gaming, AI, real estate. The website looks sleek, the white paper filled with big words. Influencers praise it. Friends talk about it in group chats. Fear of missing out returns. The newcomer buys, not because they understand, but because everyone else seems convinced. Months later, the project dies quietly. Developers disappear. The website goes offline. The token becomes worthless. Another lesson paid in full. Crypto is fertile ground for scams because it combines money, complexity, and anonymity. It's easy to create a token. It's easy to fabricate hype. It's easy to vanish. But newcomers don't know this. They trust too quickly. They believe too easily. They want success so badly that they overlook red flags. They don't realize that transparency is more valuable than promises, and real technology outlasts marketing. Even legitimate projects come with risks. Not every coin is meant to pump. Some are long-term plays that take years to mature. Some thrive only during bull markets. Some fail despite good intentions. Newcomers rarely evaluate teams, tokenomics, ecosystem demand. They don't check how supply unlocks will dilute price or how VC funds might dump tokens later. They don't track roadmap progress or community activity. They rely on noise instead of knowledge, speculation instead of research. News amplifies this chaos. When headlines shout Bitcoin crashes, panic spreads. When they shout institutional investors are buying, greed blooms. Media loves extremes. It rarely tells the full story. A market correction becomes a collapse. A slight rally becomes a massive surge. Journalism becomes theater, and newcomers become emotional audience members reacting to every plot twist. In this whirlwind of voices, real signals are drowned. The newcomer doesn't know what to believe. One influencer says buy, another says sell. One analyst predicts 100,000 Bitcoin, another predicts $10,000. Both speak persuasively. Both provide charts. Both sound sure of themselves. So the newcomer chases opinions instead of forming their own. They hop from one strategy to another, one coin to another, hoping to catch certainty in a space built on uncertainty. Each decision feels urgent. Each mistake feels personal. They start to learn how brutal the market can be when following the crowd blindly. They feel used, tricked, left behind. Confidence erodes, losses accumulate. Some leave at this point, disillusioned, angry, convinced crypto is a scam. Others stay, stubborn and hopeful, trying to claw back what they lost. They search harder, dig deeper, watch more videos, join more communities. But eventually, whether quickly or over months, almost everyone reaches a moment of quiet reflection. A moment when the hype fades, the noise softens, and the chart becomes more than just price. It becomes a mirror. The truth is clear now. The market didn't take their money. It simply received what they offered: ignorance, emotion, trust without verification. Crypto did exactly what it does: reward the informed, challenge the reckless, educate through consequence. And in that moment, when the hurt sits heavy but the understanding begins to form, something shifts. A new chapter starts, not driven by dreams of fast wealth, but by curiosity, by humility, by the desire to understand rather than gamble. That is where growth begins, and for many, it's also where the personal story becomes deeply human. Because behind every losing trade is a person learning, evolving, changing. And now we arrive at the final part, the personal reflection, where emotion meets insight, where the lesson becomes a voice, and where experience turns into wisdom. Sometimes I look back at my earliest days in crypto and smile, not because it was easy, but because it was chaotic, painful, unforgettable. I remember that rush of excitement when I bought my first coin. I refreshed the chart every 10 minutes, heart pounding with each tiny movement. I imagined a future where I would wake up rich, where everything would finally make sense. In those early moments, I believed I was standing at the edge of greatness. And then, like most newcomers, reality hit me. The market dipped, not a gentle dip, but the kind that makes your stomach sink as if gravity suddenly doubled. I watched green numbers turn red, and I felt something strange, a mix of fear, confusion, disbelief. I kept telling myself it would bounce back. I wanted to believe the hype, the predictions, the promises. But the chart didn't care about what I wanted. It fell anyway. I remember the night I sold out of panic. It's funny how clearly that memory remains. I stared at the screen for hours, fingers hovering over the sell button, negotiating with myself. If it drops more, I'll lose everything, I thought. Better to exit now. So I clicked. Loss realized. And in that split second, it wasn't just money that disappeared. It was confidence, pride. The version of me who thought I understood the market evaporated. The next morning, the price recovered. Of course it did. That's how the market teaches. Gently at first, then with irony. I felt foolish. Angry. I questioned everything. Why did I enter? Why did I sell? Why didn't I know better? It was a storm of self-blame. But as the frustration settled, something new emerged in the silence that followed. Awareness. I realized I hadn't invested. I had gambled. I wasn't acting thoughtfully. I was reacting emotionally. I entered not because I understood, but because I wanted to believe. I chased hype, followed noise, took shortcuts. I wanted growth without patience, results without study. The market didn't betray me. I betrayed my own expectations. Loss humbled me. It stripped away illusions and left only truth. And truth is powerful. So I slowed down. I started learning, not from hype posts, but from research, white papers, blockchain fundamentals, market cycles, psychology. I learned why Bitcoin halving matters, why altcoins pump harder but crash faster, why smart money buys fear and sells euphoria. I studied risk management, realized that capital preservation is a strategy, not cowardice. I learned to ask questions before investing. What problem does this project solve? Who is building it? Where does value come from? What is the long-term vision? Gradually, the chart that once felt like chaos began to look like language. Difficult, beautiful, but readable. I understood that missing an opportunity is not as bad as losing money trying to catch it. I learned that cash on the side is not wasted, it's preparation. I learned that taking profit is not greed, it's discipline. More importantly, I learned something about myself. I learned that impatience was my enemy, not volatility. That ego loses more money than bad projects. That the desire to get rich quickly blinds judgment more than any scam ever could. Crypto didn't just teach me about finance, it taught me about emotion, resilience, humility. There's a moment every maturing investor reaches where the obsession with fast gains transforms into appreciation for slow growth, where excitement turns into strategy, where gambling turns into investing. For me, that moment didn't arrive during profit, it arrived during loss. And strangely, I'm grateful for it. Because now, when newcomers ask me why people lose money in crypto, I don't give them charts or formulas. I tell them the truth I learned the hard way. People lose money not because crypto is unforgiving, but because they enter unprepared. They chase hype, ignore risk, trade emotion instead of knowledge. They want shortcuts in a system that rewards patience. They follow the crowd instead of thinking independently. And in a market driven by cycles, they buy dreams at the peak and sell reality at the bottom. But loss isn't the end. It can be a beginning, a first step toward understanding, a quiet invitation to become wiser, calmer, more deliberate. The market becomes less of a casino and more of a classroom. If I could talk to my past self, the one staring at that first red screen with panic in his eyes, I'd tell him this. It's okay to lose at first. Just don't leave with only pain. Leave with a lesson. Learn why you lost. Learn what you didn't know, and come back smarter. Today, I no longer view crypto as a shortcut. I see it as a marathon, a place where knowledge compounds, discipline pays, and patience is a superpower. A place where fortunes are not made overnight, but over time, through strategy, through control of emotion, through understanding. Losing money hurt, but it shaped me. It made me curious instead of careless. It taught me to respect the market instead of romanticizing it. And strangely, losing was the reason I stayed, because I realized I had something to learn, not something to chase. Crypto didn't change my life through profit first, it changed it through perspective. And maybe that's the real answer to the question, why do newcomers lose money in the crypto market? Because before they learn how to win, the market teaches them how not to lose.